If you're interested in generating consistent cash income from your portfolio, this video by our head of options trading will teach you to do just that. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City since 2005, and now Miami as well, and proud to have developed number 7 and even 8-figure per year traders. Watch, take notes, and learn from a pro SME trader so you can grow your trading account.
Hi, I'm Seth Freudberg, and I'm the head trader of SMB Capital's options trading desk here in Manhattan. And lots of traders trading small accounts prefer to trade SPY options instead of SPX index options when they're looking to make a trade that reflects the S&P 500 index, when they're not focused on any one particular stock, but rather when they want to trade basically the whole market. And the reason that they prefer to do this with SPY options is that SPY stock itself, which is the ETF that mimics the S&P 500 index, SPY stock itself is valued at 10% of the size of the S&P 500, and SPY options are also about 10% of the price of SPX index options. So trading SPY stock and SPY options is much more affordable way to trade the whole market if you're working with a smaller account. And so I'm frequently asked what's the best strategy to use when trading SPY options, and that's what we're going to be sharing with you today, a powerful option strategy that's simple to understand and implement. Now, before we get into the option strategy that we're going to be teaching you in the video, if you're absolutely brand new to options trading and you don't know much about how options work, we've put together a video for you to understand options basics. So if you click the video appearing on your screen right now, it'll lay the groundwork for you to understand the option strategy that we're going to be teaching you in this video. Then when you're finished, you can come back and watch the rest of this video. Let's head back to about a year ago, to Friday, September 15, 2023, which was the third Friday of September in 2023. And the reason that I mention that is that the third Friday of each month has traditionally been a date in each month where almost every stock and index has an options chain that expires that day. And since all third Fridays of each month are more or less 30 days apart, if you wanted to do a campaign of trades that expired about a month or two apart from each other, you could do that because there will almost always be an options chain that expires on the third Friday of every month, published many months in advance. And so with that in mind, on that day, as you can see, the SPY was in the midst of a mild pullback that had started back in July. And so by the closing bell on September 15th, it had sold down to 430, 437. And so let's say that on that day at the close, we pulled up an options chain expiring on the third Friday of the next month, which was October 20th. And we went ahead and located a call option, which had a price that was about 0.5% of SPY's price that day. And so we identified that to be the 455 call, which was trading for 222 that day, which met the criteria of the highest call that sold for at least 0.5% of SPY's price, as you can see. And so when a trader simultaneously buys shares of a stock and sells calls against that stock, one call for each 100 shares he owns, when a trader does that, he's entering to what options traders refer to as a buy right trade, which is a bullish or neutral strategy that you can trade for producing cash income and profits in your account every month. And so that you'll understand how this can play out, we're going to move to the day that the call options expire. So we're going to move to October 20th. And as you can see, the SPY continued to sell off after we put the buy right trade on. And so by the time it expired, the stock had dropped to 421.19. And so with the stock closing so far below where those 455 calls are located, obviously those calls will expire worthless because there's no value to a call that's located much higher than where you can buy the shares in the open market. So those calls expire worthless, and we just pocket the cash we received for those calls. And so we're going to start keeping track of how we're doing on these trades because this is the beginning of a campaign of doing these each month. So just how much did we make on those calls? Well, we sold those two 455 calls for 222, but each call represents 100 shares of SPY stock. So you multiply that by 100, and we sold two of them. And so when you multiply it all out, it comes to a realized gain from selling those two calls of 444. So The first entry in our scorecard is going to be a realized gain of 444 on those calls and no activity on the shares. Okay, so now that the first trade is closed, we're going to be opening our second trade, and that's going to be the November buy right. And as you can see, we go out to the highest call valued at least 0.5% of SPY's trading price, which in this case are the 438 calls expiring on November 20th. And again, because we got 200 shares, we're going to sell 2 of them. And then moving forward to November 20th, we can see that SPY had reached 450.79. And so let's see how our trade plays out at this time. You see, when a stock closes above the strike price of a call on the day it expires, unless you had previously bought back that call, your broker is going to automatically sell your shares, in this case 200 shares, because we sold 2 calls. Your broker is going to sell those shares at the strike price, which in this case is 438, as you'll recall. And so if we look at what that means, you can see that those shares, having been sold, result in cash of 87.6, as you can see from the calculation. And don't forget, when we sold the calls, we received cash for those. And so we sold 2 of them for 214, and each call options contract represents 100 shares of SPY, so you multiply that price by 100, and we sold 2 of them. So at the outset of the trade, we received 428, which we also get to keep. And so subtracting out the original cost of the shares, as you can see from the calculation, the net profit on the first trade is 1154. And so we'll add this to our scorecard, distinguishing between the cash we keep from having sold those 2 438 calls for 428 from the profit we made selling those shares at the call strike price, which brought in a realized share profit of 1154, which adds up to our total realized gain for that trade. Okay, so as we continue this campaign, because our shares were sold off in that bounce, we need to buy those shares back for the December trade. And we have to pay $450.79. And so we pull up the options chain expiring on the 3rd Friday in December, which is December 15th. And we repeat the process, selling the highest call options with a price of at least 0.5% of SPY's price, which in this case is the 460 call option, 10 points above where the SPY is currently trading. And that call is selling for 229, as you can see. Now, moving forward to the day this trade expires, you can see that SPY rallied significantly into mid-December, closing at 469.33. And as a result, the shares are again assigned because our calls were located at 460 and the stock closed well above that at 469.33. And so, taking a look at this trade's result, you can see that again, we sell the shares at 460 in this case because of the 460 location of the calls, and we add in the cash we receive for selling those calls, which as you can see is $458. And subtracting out the original cost of those shares back in November, you can see the total profit for that trade is $2,300. And so we'll update our scorecard accordingly. Okay, now we're going to move to the January trade, which expires on January 19th. And as you can see, this time we again buy our 200 shares to execute the buy right. And in this case, the 480 calls meet our criteria. So we sell 2 of those, and moving to the 3rd Friday in January, January 19th, we can see the bounce continues into the new year with the SPY closing at 482.43, again causing our 480 calls to be assigned and our 200 shares sold for 480, meaning that we again profit from both the sale of the shares and the cash from selling those calls, resulting in a profit of $2,644. And so updating our scorecard again for the January trade, we'll move to the February trade, where we sold the 492 calls expiring on February 16th, which met our criteria. And similarly, the February calls were also assigned, as you can see, because SPY continued its rally, closing at 499.51 on the day those options expired, resulting in those 200 shares, again, being assigned away at the price of those calls, which is the 492 strike price. And thus, this trade also resulted in a nice profit of $24.66. Now, on the March trade, where we sold the 510 calls, which met our criteria, of course, selling those for $266, by expiration on March 15th, the SPY rallied, but not quite far enough to the 510 price, just short of those. And so those calls simply expire worthless, meaning that, again, for the March trade, as we did with the very first trade in the campaign, we were able to pocket the cash we received for selling the calls. But there was no sale of our shares for a profit, as is reflected in this update of the scorecard. And so with those same shares, we just carry those over to the April trade, where we sell the 525 calls for 269. And so it's not to be too tedious. We could just share with you the rest of the full year campaign. And you can check this if you have options backtesting software, by the way. But the April trade resulted in those calls expiring worthless, again, because SPY actually sold off a bit in April, but we still get to pocket that 538. In May, the SPY resumed its rally, and so that resulted in a profit derived from both the calls we sold and the profits from those shares being assigned away in the amount of 3216. The June trade had the same kind of result, a combined call premium and share profit trade, resulting in a combined profit of 2840. The July trade did not result in the shares being assigned because SPY never reached the strike price of those calls we sold that month, and so they just expired worthless, resulting in a profit just derived from selling the calls in the amount of $566. And that happened in August as well, with a profit of $588. And so to round out the year, we need to look at the September month, and the calls expired worthless in September as well. But in this case, just to show you how the trade would have wrapped up over a full year, we're going to go ahead and sell the shares anyway so that we can show you a full year of trading this approach. And so if we were to close the trade on September 20th, where the SPY closed at 568.25, the realized gain on the shares would have been 4,832 because those shares were acquired back in June for 544.09 and never assigned away, so they've appreciated quite a bit over that 3-month period, thus the outsized gain. So when you calculate the final profit from the full campaign, you can see that we made a profit of $20,534. So as you can see, there is a way you can earn cash income every month from SPY options through the buy right strategy. Every single month, without fail, you'll collect the premium from selling those calls above the stock's trading price, and at a minimum, making a profit from that premium that you collect on the calls. In the month where the stock closed beyond the call strike price, you'll earn a realized gain on the shares as well. As you can see, this practice can be really profitable while producing cash income for you every month, regardless of the closing price of SPY. And on top of that, SPY pays a modest dividend. And so through the use of the buy right strategy, you can turn your SPY shares into an engine for cash generation. And in a bullish market, of course, profit as well on the gains you'll get in those months where the shares get assigned. This is the kind of strategy that professional options traders use all the time. And now you've got the knowledge to prudently adopt a strategy like this on a solid stock that you follow.
Now, if you'd like to learn 3 more option strategies that our pro traders use, including the unique options trick that allows you to make money while you wait to buy stocks or ETFs at the price you want, and the options income strategy that allows you to make consistent money whether the market goes up or down or sideways, and how to make money on a stock or index trade even if you're wrong on the direction, then click the link that's appearing right now at the top right-hand corner of your screen. That will open up the free workshop registration page in a new window. So don't worry, you won't lose this video. Or you can register directly for free at optionsclass.com.